In the time it takes you to blink, a fortune is made, and another is lost. In the 300 milliseconds of that simple human reflex, an entire universe of transactions has already occurred. Millions, even billions of dollars have changed hands across the globe, moving at the speed of light through fiber optic veins buried deep beneath our oceans and cities. This isn't the work of human hands. There are no phone calls, no shouted orders, no frantic scribbles on a notepad. This is the new financial world order, a silent, invisible empire ruled by pure, unadulterated speed. A world where the battles are fought not in trading pits but in microseconds, and the victor is decided before a human brain can even process the thought to compete. It wasn't always this way. For the better part of a century, the stock market was a distinctly human arena, a chaotic battlefield of emotion and instinct. Picture the trading floors of the 1980s, a roaring sea of bodies, a cacophony of shouts, a blizzard of paper tickets. Fortunes were built on a gut feeling, a sharp eye, the subtle language of a hand signal across a crowded room. It was a physical, visceral world where success depended on who could shout the loudest and think the fastest. The market had a human pulse, a rhythm you could feel in the floorboards. But in the late 20th century, a quiet revolution began. Following the market crash of 1987, the first electronic systems were introduced, designed to make trading more efficient. At first, they were seen as simple tools, glorified calculators to assist the human traders. No one imagined these machines could ever replicate the intuition, the artistry, of a seasoned professional. The change was subtle, almost insidious. While the traders shouted and gestured, the machines were learning. By the early 2000s, the shift was undeniable. The machines weren't just participating anymore, they were dominating. This was the dawn of high-frequency trading. Algorithms, armed with unprecedented processing power, began to scan the market, hunting for microscopic price differences and executing thousands of orders per second. They could read a news headline and react before a human journalist had even finished typing the sentence. The crowded floors emptied out, replaced by the cold, sterile hum of server farms. The human pulse was gone, replaced by the relentless, logical heartbeat of the algorithm. A silent coup had taken place, and the ghost in the machine was now in control. In the world of modern finance, a war is being fought, not with soldiers but with light and logic. This is the world of high-frequency trading, HFT, a digital battlefield where the only rule is to be faster than everyone else. In this arena, speed is not just an advantage, it is the absolute law of survival. A microsecond can be the difference between profit and ruin. The core strategy is deceptively simple. The goal isn't to win big on one trade, but to win small, millions of times a day. It's about capturing infinitesimal profits, fractions of a cent, on a colossal scale. Imagine buying a stock for $10.0001 and selling it a moment later for $10.0002. For an HFT firm, this tiny victory, repeated millions of times, builds fortunes. They are the market's predators, feasting on the microscopic gaps between buying and selling prices. This obsession with speed ignited a technological arms race. One famous fiber optic project cut 4 milliseconds off the trip between Chicago and New York. It cost $300 million. To do it, engineers blasted a path straight through the Allegheny Mountains instead of going around them. The investment seemed absurd for a gain measured in the blink of an eye, but in the HFT world, it was a masterstroke. It paid for itself in months. But even fiber has its limits. Light travels through glass about 30% slower than it does through open air, so the arms race escalated. The new weapon of choice? Microwaves. Firms began constructing chains of massive towers, perched on mountaintops, beaming data in a straight line from one financial center to another. It's a fragile, weather-dependent technology, but it's faster. And in this game, faster is all that matters. The battle for milliseconds had become a battle for the sky itself. But raw speed is useless without the intelligence to wield it. A trading algorithm is a recipe, a set of rules telling a computer what to do when certain conditions are met. But these aren't simple recipes. They are complex digital strategies, crafted in secret by teams of PhDs in physics and mathematics. These proprietary codes are the crown jewels of HFT firms, guarded more closely than state secrets. Market-making algorithms place simultaneous buy and sell orders, providing liquidity while scalping a tiny profit on every transaction. Meanwhile, arbitrage algorithms compare prices across global markets in real time, hunting for minuscule price differences for the same asset in New York and London. The moment a discrepancy appears, they strike, buying low in one market and selling high in another, all before the rest of the world even knows what happened. In high-frequency trading, the laws of physics are the ultimate barrier. At the microsecond level, millionths of a second, even the speed of light is a bottleneck. Information carried through thousands of miles of fiber optic cable can only travel so fast. The journey from New York to London creates a delay of mere milliseconds, but in this game, milliseconds are an eternity. An eternity where the fastest signal arrives first and takes the prize, leaving everyone else with nothing. It's a race where the finish line is measured in the blink of an eye. This physical limit has ignited a technological arms race of unprecedented scale. Firms fight over nanoseconds, billionths of a second, like boxers over a championship belt. They spend hundreds of millions on co-location, buying server space feet from the stock exchange's own computers. They build networks of microwave towers, because signals travel faster through air than glass fiber. It's a battle of inches, fought with custom-built hardware and bleeding-edge physics, where the prize isn't a belt, but market dominance worth billions. And sometimes, the prize is a hidden goldmine. In 2015, one team found a tiny delay between futures and spot prices, a ghost in the machine. Their algorithm was fast enough to see it, and to strike, buying on one market and selling on the other, exploiting the difference over and over. The result? A staggering $1 million in profit every single day. But secrets don't last. Other algorithms, sniffing out the same opportunity, flooded in. The gap, once a reliable river of cash, was competed away into nothingness, vanishing as quickly as it appeared. But when these algorithms go wrong, the consequences are catastrophic. May 6, 2010. The market went into free fall. The Dow plunged nearly 1,000 points in minutes, erasing $1 trillion of value. This wasn't driven by news. It was a digital flash crash, a terrifying feedback loop where one algorithm's sell order triggered others, which triggered more in a cascading electronic avalanche. The machines were talking to each other and they were screaming, "Sell!" It was a stark warning. We had built systems so fast they were now operating beyond the limits of human control. That warning went unheeded. 2 years later, the nightmare scenario became reality for Knight Capital, a firm handling nearly 20% of all U.S. stock trades. A software update accidentally reactivated a piece of old, dormant code. Instantly, the algorithm went rogue, buying high and selling low at lightning speed. It was financial suicide. For 45 agonizing minutes, the company bled money. By the time they pulled the plug, Knight Capital had lost $440 million, a titan of the industry, brought to its knees by a single faulty line of code. The race for speed is now matched by a race for intelligence. The new generation of algorithms are powered by machine learning, pulling data from everywhere. They analyze the tone of a CEO's voice, track satellite photos of retailer parking lots, and parse the sentiment of millions of tweets. These systems aren't just executing pre-programmed instructions. They are learning, adapting their strategies in real time, searching for patterns in the chaos that no human mind could ever find. The game has changed. It's no longer just about who is fastest, but who can build the smartest machine. Quantum trading could make today's fastest algorithms look slow, processing unimaginable data in nanoseconds. Should traders with the fastest connections have an unfair edge? Regulators are trying to keep up, but innovation runs faster. Trading algorithms are the silent pulse of global finance, ruthless, precise, almost alive. In this arena, time isn't just money, it's everything.